Surendra, within the IT, the next big catalyst or the event to watch would be what Infosys and HCL Tech says in April, right, for the next year outlook. What's generally your sense on the entire IT space? And within the IT names, would you be more comfortable with the mid-cap IT, or you would go with the large caps like the TCS and the Wipros and the Infosys of the world?
Right. So firstly, on IT services, we are expecting a slow recovery.
Sure.
Okay, so like one of the things which played out in this year is that while US growth has continuously surprised on the upside, but Indian IT growth has only seen downgrades.
Yeah.
Right. So you are getting to a point where year over year the comps are getting easier, right? And then towards the second half you should see some recovery. So definitely it feels like we should see an improvement, but we don't think the improvement will be as much as the market is already building it. Okay, so it will be a slow kind of a recovery, and that is the reason we are still quite cautious on the space overall. In addition to that, there is the additional thing to worry about on what GCCs do to incremental spending, because that's somewhere we have seen a lot of traction in the GCC space. Secondly, the industry keeps on getting fragmented, right? Like if you look at the situation versus 5-6 years back, the smaller players are a lot more relevant, right? They are starting to win somebody in insurance, someone in BFS, but they are starting to win more, which increases the fragmentation for everybody in a market where growth is not as strong. Right. So given this entire backdrop, we are still cautious. Now, on the second part of your questions, small caps versus the large caps. See, large caps, I think from a growth perspective, the well-run mid caps will still deliver faster growth. And that's something we have consistently written, because our belief was around 5 years, 6 years back, the market structure itself changed a bit in favor of the mid caps because of cloud, because of digital, right? Because of a lot of management change where the smaller companies had guys from larger companies coming in to lead and so on, right? Those things are still in place. But today, when you look at the valuation gap, a lot higher growth in the mid caps is already priced in. So to that extent, on a 1 year basis, risk reward wise, we find some of the large caps better. But even there, we are very selective, right? If you look at our recommendations, we are very, very selective on the sector.
Just to take off, Namesh, on that point on PSUs, PSU banks, on PSUs overall, is there what's your thesis, Surendra?
No, so we are still constructive, right? If you look at the list of preferred stocks that we publish, there are quite a few PSU stocks in there. And see, the starting point was a few, say a couple of years back. Looking at everything in terms of the business outlook and valuations, you had bottom-up stories on the PSU side, which were like really attractively priced in context of the market. Right? It could be a defense stock.
Sure.
It could be a utility stock, for example, right? Those were like really attractively priced. And that's how, and again, it's not like we decided that they come into the preferred list because they're PSU.
Sure.
Right? It was like, okay, great story, good valuations. It has to be in the preferred list. And then the situation for OMCs improved, the gas stocks improved. So you have some gas stocks, some OMC, which has also come into that list. Even today where we sit, some of those stocks look very attractive on risk reward, particularly when you look at valuations across the space. The entire market is definitely, there are a lot of sectors which are trading 2 standard deviation above 5-year and 10-year means. In that context, some of the stocks still look quite attractive. And particularly, I think you also have to keep in mind that there is likely to be more capex driven growth, which may benefit some companies more. And in the past, if you go back and see the prior cycle, where India had a great run on capex, some of the stocks were actually trading much higher than where they are trading today, or in line with where they are trading today.
Sure.
Saurabh, the other sector that you track closely is Telecom. And there is a lot of hope and belief that maybe post-elections you will see a tariff hike across the board. Generally, what's been your call on the telecom sector? And within that, I believe you are very bullish on and constructive on Indus Tower. Your rationale, please.
Yeah, so we also subscribe to the view that tariff hikes should be coming. It's hard to say whether it happens immediately after elections or with a bit of a lag, but sometime this year. We are calling for roughly around a 15% sort of tariff hike in the 4G space, which should benefit the ARPUs of these companies. We've been positive on Bharti for a while for the last few years. We maintain our positive stance there. We believe it's a very strong structural story. Execution has been very strong. They're gaining market share. There is a laser focus on deleveraging, on FCF generation, etc. And even CapEx should start coming down next year. On Indus, yes. So we had taken a contrarian view.
Yeah, you are a
last
contra
year.
in that sense.
Yes. So we continue to maintain our buy view there. We've in fact recently raised our target price there to 320. As Surendra was mentioning, that's another stock which is still trading at below long-term means. It's trading maybe at 6 times EV/EBITDA. Its long-term is 7.5, and I think rightly so. I mean, there has been massive consolidation in the space. They've obviously had challenges over the last couple of years, primarily because of how even one of the players has played out. But things are changing. First of all, they should be generating good free cash flow next year in our view. There is scope for reinstatement of dividends. And as you're aware, there is a potential fundraise that Vodafone Idea is seeking to do.
Do you think we'll have a viable Vodafone Idea? Stronger, viable? As a strong
I mean, if
competitor?
the fundraise, it depends on the fundraise. If it gets complete, then certainly it should be in a much stronger position, at least to catch up. So they have lagged a bit on 4G investments. They haven't managed to roll out 5G as yet. So they do need investments to keep up pace with the other two. So clearly they'll be in a much better position.
But your call on Indus Tower is not tied to whether...
not yet. So our bull case would be tied to that. So our base case assumes a status quo sort of situation. But we've actually highlighted that, assuming that the Vodafone Idea fundraise goes through, and they've had challenges in completing that over the last couple of years. If this time is indeed different, then we believe that there is further upside to Indus beyond our base case of 320.
Surendra, your target for this year on Nifty doesn't suggest too much of an upside. From a viewer perspective, what would be your sense? Will this be a year of consolidation? Will only select large caps do well? Briefly, you can tell us what you expect for the next second half of the year.
Yeah. So see, our view was, so this is a target we put out, I think, in the first week of December.
Yeah.
Okay. And a lot of upside did get captured in December.
True.
Okay, which was partly because of the state election outcome, which obviously gave investors a view on what could potentially happen. All right. So some of that upside got priced in. As I said, valuations are premium, particularly when you compare it to other emerging markets. And that's the reason we feel that it might be more range-bound in the near term, with more selective opportunities rather than kind of the market continuing to rally. We also cognizant of the fact that there has been a lot of incremental buying which has come in because the market has done well.
Sure.
Right?
But given the flows and given the valuations where we are and in terms of earnings as well, how big could be the downside risk from these levels?
No, so I think, like if you look at our last note, what we have been writing is that we are constructive medium term, but it does feel like that there could be a risk of consolidation given how well the market has already done. And to that extent, I think one should still be selective near term.
Surendra, just one aspect, retail flows, right? They've become such an important part, and it's coming in every month. It's coming in, and in the initial phase, said, well, the retail comes in at the top, and one down cycle, but it's a very steady, almost structural kind of thing. We're sticky, right? How do you? Any thoughts on that? I mean, how can that really change what stocks trade at? I mean, if you looked at other countries which have gone through the similar kind of experience, and just your sense.
Yeah. So see, flows is always very difficult to predict. Okay.
Yeah.
The only thing I would say here is that a lot of flows have generally come in at a time when the markets have only been grinding higher, right? And particularly if you look at, say, post-COVID, or even COVID was not that long a fall, right? So it means pretty much every dip is a chance to buy. And that has really worked so far. So I think that could really get challenged when you have an event which can drive the risk of downside where people actually see some serious downside. That is what I think will really test this money coming in. But otherwise, it's been good. And we have, from a rates perspective, we have seen one full cycle, right, where we did not see flows really suffering. So to that extent, I think you need some kind of an event which tests that, okay, is this money patient enough to hold when you get that downside?
Or a period of no returns
So
it's a long period
I
of...
think, yeah, so that could also be true, but that I think takes out some of the really short-term money, right? I don't think it really challenges people who have put in money with a 3-year mindset, right? There could be like, okay, people have come in for a quick buck. Those kind of people might be like, okay, this market doesn't deliver as much as we thought.
Sure. Yeah.
But I don't think that you get a downside event. That I think will really test this.
All right, I think that gets us to a close on this conversation. Surendra, great to have you with us here. Saurabh, appreciate your time here. Kunal, thank you very much. All three of you, thanks so much.
Thank you.
Thank you.